Good morning everyone and welcome to another RF crypto video. Today's markets have gone down by almost 5.5%. The global crypto market cap is now standing at 1.22 trillion. It seems like the market can't catch a break. Whenever it goes above the 1.3 trillion or comes close to it, the bears get into the market and push the prices down. We can see here that most of the crypto market is down. Obviously the average is about 5% and Bitcoin is standing at that. Ethereum always overshoots and obviously exaggerates, decreases by more than the average, is down by 7%. The rest of the market is in the red. Avalanche is down by 12%. Shiba Inu, which is a meme coin, surprisingly, is only down by 5.71%, which is the average. Usually when there's a decrease in the market, the meme coins such as Shiba Inu and Dogecoin, they tend to have a more pronounced effect by decreasing more than the average, but it hasn't happened in this case. So looking at the top 50 coins, most of it is down except for Tezos, but it's not up by much. Obviously company specific factors have caused this little spike right here, and that's why it's gaining positive momentum. Looking at the price of Bitcoin, we see that it was making extremely good progress. It broke above the $30,000 support level. It was heading and reached very close to the $32,000 resistance level, and we were at around 31,300 by the time of yesterday's video. And unfortunately today the bears got into the market very strongly. There was a massive sell-off and the price decreased from about 31,000 to about 29,152 at its lowest. The bears got in very aggressively. It broke below the $30,000 support level and it was making its way down to the $28,500 support level. However, the bulls quickly started buying up. It's most likely institutions buying the dip because now we are seeing a lot of inflows into Bitcoin, and most of these are institutions who are taking advantage of the price drops. So these institutions that stepped up managed to salvage the price of Bitcoin from going below 29,000. Now looking at the price of Ethereum, I think it's the first time that we're looking at the price of Ethereum. And if we zoom out to look at about a month ago, we see that Ethereum was at about 2,450. It's made its way all the way down to 1,700 at its lowest, and it continued to trade along these levels. And here it is trading at a higher low. However, in the past 2 or 3 weeks, the prices have dropped significantly, testing the $1,700 support floor level, which is the minimum it's gone in the past few weeks, once, almost twice, 3 times. Actually 4 times if you count a month ago. But there is negative sentiment by investors in Ethereum. The prices are quite depressed and there isn't much activity going on in the Ethereum network. Although it has increased in the past few days, it's not enough to bring its price going up. And if you can see in the trading volume here, most of the trading volume is selling. So there has been a lot of outflows from Ethereum and this money is flowing into Bitcoin, which is evidenced by the fact that dominance has increased and now it's standing at 46.3%. And this indicates that almost half of this $1.22 trillion market cap is sitting with Bitcoin. And Ethereum's dominance level has significantly decreased from the mid-20s to 17.5%. Look at some news. Growth in US jobs continues in May, continuing a 17-month streak of gains, which is incredibly good news. It is good news for the market, and by extent, it's good news for the crypto market. And looking at the statistics, they added another 390,000 jobs in May, and the unemployment rate remained at a very low rate of 3.6% for the 3rd month in a row, which is nearly a half-century low. The number of unemployed people was unchanged at 6 million, and a lot of these unemployed people contribute to basically frictional unemployment, which is people who are graduating from university and looking for jobs, or people who have quit jobs and are on their way to new jobs or are looking for new jobs. So of the 3.6%, the truly unemployed might be actually half of this, which is great news for the US economy. And this is the 17th consecutive month that the US economy has added jobs, and employers are now struggling to find enough workers. Imagine that. Before, it was workers who were struggling to find jobs, and now employers are struggling to find enough workers and retaining those workers because the job market is offering so many jobs. For example, there were 11.4 million open jobs in May. It's close to the record high of 11.9 million open jobs in April, and wages are rising as a result. Just imagine, there are 6 million unemployed people, but almost 12 million jobs available. So these employers are now increasing the rates of their wages and trying to attract the best of these employees. Not only are they trying to attract the 6 million unemployed or part of it, but they're trying to attract skilled workers from other companies as well by offering higher wages. And that's why over the past 12 months, average hourly earnings have increased by 5.2%, which is a lot stronger than pre-pandemic gains. So pre-pandemic, it was about 2 to 3%. However, there is a caveat to this. It's not all roses. The annual inflation rate reached 8.5% in March. So your hourly earnings have gone up by 5.2%. However, the inflation rate has gone up by 8.5%. So in a nominal sense, in the sense of the number of dollars you're getting 5.2% more. However, in real terms, your wages have technically decreased by 3.3% because the prices have gone up by 8.5%, but your wages have gone up by 5.2%. So the amount that your wages go up by is not enough to cover the increase in prices, indicating that your purchasing power has decreased. So the fact that unemployment is extremely low, workers are struggling to find jobs, is still not enough to cover this incredibly high inflation rate. And employers will have to offer higher rates to match inflation or even beat it in order to get the best of these talents. Also, Michael Pierce, a senior US economist at Capital Economics, has stated that the better than anticipated 390,000 gain in non-farm payrolls adds to the sign that the economy is still strong, while amid a rebound in the labor force, wage growth is beginning to moderate. So wage growth is beginning to slow down, which is a great sign due to the fact that inflation is still very high. But other than that, the US economy is doing very well, it's very strong, and it's a good sign for the markets and by extent, because it means that there's a lot of economic activity going on. People are earning money, people are spending money, and it gives room for the Federal Reserve Bank to increase its interest rate in order to moderate inflation. So I think that in the next two meetings, they will increase interest rates by about 50 basis points, which is 0.5%, so totaling about 1% in about 8 months or even a year. And they want to target 2% inflation, and at 8.5%, it's way above that. It's more than 4 times what the target is. And the tools that they have at hand is increasing interest rates. However, by increasing interest rates, they're going to slow down the economy. But they can afford this to a certain extent because the economy is doing so well. Unemployment is low, wages are rising, and employment growth is very strong. So these are very positive developments for the crypto market. On other news, Solana developers tackle bugs hoping to prevent further outages. These developers fixed a runtime bug that caused the latest outage on the 1st of June. And this bug was basically in the durable nonce transaction feature, which caused the network to stop producing blocks for roughly 4.5 hours. And what this nonce transaction means is a type of transactions on the Solana network that is designed not to expire, unlike a normal transaction on the network, which usually has a very short lifespan of about 2 minutes. And after that 2 minutes, the block hash becomes too old to be validated. And Solana Labs have implemented nonce transactions, but I think they didn't actually place proper mechanisms in order to make them flow properly. And that's what's causing all these bugs and network outages. And now they have noticed that they require a separate mechanism to prevent double processing and also for serial processing. But I don't think that they perfected the technology to run these nonce transactions, and that's why it's causing the transactions to fail. And if they fix this bug and they can show that the Solana network can run in a stable manner, then I think that Solana will take off. I know that it's gone down by 13.9% since the 1st of June due to the outage. However, if these outages can be prevented, it can be the next Ethereum, even surpassing it, because Solana has low transaction fees, very quick transaction times, and it is trusted by a lot of big crypto developments. So the sooner they can resolve this issue, the better for the longevity and the success of their network. This is a very interesting development in Japan. There is a new law that is in place that may allow seizure of stolen crypto. So its Ministry of Justice is reportedly considering a revision of an asset seizure law relating to organized crime to include a stipulation that crypto can be commandeered in such instances. This amendment to the Organized Crimes and Controls of Proceeds of Crime Act enable law enforcement officers and courts to take control of crypto assets used in criminal activity, and this can include money laundering, corruption, terrorist financing, and other illegal activities such as drug trading. And this is very, very, very good because regulation is needed. These criminals using crypto in order to evade law enforcement need to be held accountable for their actions which negatively contribute to the defamatory remarks of crypto. If they can get this into law, it will be fantastic, because criminal activity using cryptocurrencies will decrease significantly post this law going into place. And I think that this law will be approved, because the amendment to the law would need to be approved by cabinet and signed off by parliament. And it won't be given much resistance given the nature of such a proposal, which will be to strengthen the financial system of Japan. And Japan has been very active in promoting regulation in terms of crypto, and great steps have been taken. A couple of days ago, Japan's parliament passed a bill to ban stablecoin issuance by non-banking institutions as part of a push to reduce system risk and provide greater consumer protections. Under this bill, only licensed banks, registered money transfer agents, and local trust companies can develop and issue stablecoins, which I think is great, due to the fact that the stablecoins are pegged one-to-one to the country's currency, and they need to hold reserves to maintain the value of that stablecoin pegged. And a lot of these companies, they'll try and trick the regulators, and they'll try to cook the books in order to seem like they have enough money to back the stablecoins in circulation. Only regulated and licensed institutions can issue stablecoins. This will ensure that they abide by the law and that stablecoins are in fact stable, and it will reduce the chances of it imploding, which means that stablecoins will be more trusted by the crypto community and even by governments, because we know that municipalities are starting to accept CBDCs and other stablecoins for payment of rates and taxes. So if these regulated stablecoins are in fact stable, then it increases the pool of the available stablecoins that can be used for payments of such things, which will lead to greater adoption of crypto in general, which is good for everyone. And that's it for today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with your family and friends. Invest wisely, and cheers.